Hey guys, I'm Ivan.
Hey guys, I'm Joanne.
And together we are from
Quadrant.
So Joanne, can you share with us a bit about who are you and also what are we going to be talking about today?
So I'm actually the head of research of Quadrant. Basically, I'm just doing research in property markets in local and overseas. So today we are going to talk about this news that panics everyone, that MAS actually revealed that they actually warned Singapore household on the rising mortgage debt ahead for the potential increase in interest rate.
Wow, it's like very scary, right?
Yes.
In the sense that when I first read this news, right, and like people are like sending this, like forwarding this to me, it's like, oh my god, interest rate is going to be rising. Oh, then everyone may have difficulties in like paying for their mortgage. It feels scary. But the thing is, right, I would say that this is actually first order thinking, okay, and first order like or what call it conclusions. But the more important thing, right, is to think in terms of second order, in the aspect of like, how high are interest rate going to be rising? And like with the current interest rate that we are paying, right, and the impact of rising interest, right, how is it going to impact like investors or like homeowners?
Yeah, a lot of people might be overreact on the news, like, oh my god, the interest rate is increasing and my expenses increase and I'm overstretched or anything. But it may or may not affect you. Depends on how do you make your decision when you buy your property.
So let's go in depth and to find out more. Let's go. So let's use the case study of like buying a property, and in the context of buying a home, a property for homestay, the property may cost about 1.5 million, right, in the private property market. So at $1.5 million, right, property purchase, right, and we in the Singapore context, we can borrow 75% of the property.
Yes.
So what is the mortgage, right, that we'll be paying?
So let's say 1.5 mil, and we look at a 1% interest rate. So the mortgage you will be paying around like 3618.
3618. Okay, so by the way, if you want to run these numbers, right, you can use the Quadrant calculator to run out these numbers for yourself. So you see, if the interest rate is 1%, right, we're paying 3618, right, $3,618, and if interest rate goes up to 1.5%, right, what is the monthly installment that we are paying?
To go up to 1.5% is around like 3,800 plus. It's
So
3,883.
383. So the difference, right, is actually $200 over dollars, right, when interest rate rises from 1% to 1.5.
Yes.
So what's your take on this like rise? Is it acceptable? Is it okay, or is it too much?
I think the rise is quite acceptable, and it's not like the interest rate going to increase from 1 to 1.5 immediately. So it's like gradually, like when economics is doing good, then government like increase the interest rate and everything is go up. So with that, right, the difference around like 200 plus, it's not a very scary thing, and it's not like immediately next month I need to pay more 200. It's like gradually increase. So it doesn't really impact a lot for some cases that people that actually don't overstress themselves.
So and the next, right, if interest rate goes up to 2%, right, what will the monthly installment be like?
For 2% interest rate is around 4,4158, and hold on, so I'm not a math genius that I can figure out this number, okay? Like I actually use Quadrant app to calculate the numbers first.
The behind the scenes is that actually Joanne has a calculator in her mind and her brain, right? Basically her brain, right, functions like an Excel file. The numbers come out. Is it true?
No, I utilize of Quadrant app to know all the numbers, which is very useful.
Okay, let's come back and focus. Okay. So if you are talking about the 3,600 over dollars, right, for 1% interest, and when interest rate doubles up to 2%, right, it becomes the monthly installment becomes 4,000 plus.
Yes, 4,000 plus.
Yeah, so the exact number is 4,158. So the difference is actually about
400 plus to 500.
400
yes.
plus to $500.
Yes.
So in this aspect, right, will $400 or $500 be difficult for the homeowners, right? My take is that yes, it will be difficult, but will it be devastating, right? Will people go into bankruptcy or what so, right? The answer is not really.
So, and also depends on like when the people that actually buying this property, how's the situation? Do they really stretch themselves to really buy out this property for 1.5 mil, or they are actually okay with that? So for people that are okay with that, the increase is not like fatal. It's not like you're going to go bankrupt and anything. But for people that actually really overstretch this, right, then you might need to consider some alternative for
that is a very, very good point, which is to look at the situation, like who are the people, right, who have like possibly overstretched themselves? Let's look at the numbers. You see, when we are talking about taking on a 75% loan in the Singapore residential context, right, all of us are subjected to this TDSR, which is total debt and servicing ratio. Yes. So when we are talking about total debt and servicing ratio, right, the interest rate that is used to calculate this is at 3.5% for residential property. Yep. And what's the maximum amount of loan that we can take, like the percentage wise?
So for this in order to take this percentage of loan or buy this 1.5 million, right, consider that if you don't have other commitment and your monthly salary need to be like 8,418, so it's 8,418. So if you're actually having this salary like very accurately and this range and you stretch yourself, then you might have an issue for this.
Oh yes, so you see, if the income is 8,418 versus the money installment at 3,600 plus, right, it's still a pretty much a okay balance in the sense that not like 100% of our income is going to go into property. You still have like money to spend on like other necessities. So my point is this: when interest rate rise, right, the money installment will become 4,000 plus. And will there be a cutback in lifestyle? Like, I'm gonna like eat out less, or am I going to like spend less on like travel or whatsoever? The answer is absolutely yes, but is it like gonna be devastating, like bankruptcy, or like people go into hardship? The answer is not really.
Yeah, but you might not be able to buy a new car for that. Yeah, you might not be able to buy a new car. Might even need to like consider to sell your car if you're having a difficulty on the installment. Yeah,
so that's absolutely right. So overall, in the overall picture of things, right, my take is that when interest rate rises, right, not everyone will fall into hardship. The percentage is there, but it may be small. Yes. And hence, right, it's not so much of a big impact. And the thing is, right, when will governments actually raise interest rates, or when will interest rate rise? My take is that it will rise in an environment whereby there is a very high inflation. It means that the economies may be doing very well, and hence countries, right, governments want to put on a higher interest rate, right, to cool the economy. So when it comes to that situation, right, it already means that the economies are doing well.
Yes.
Yeah. So when economies are doing well, it means that possibly the properties have appreciated in the first place. So like, instead of selling the car, right, in the first place, if your properties appreciate and you can't afford the money installment, right, sell the property. Yes. That is, of course, you must sell it after the 3 years seller stamp duty, 3 years lock-in. But that's my perspective. So it's like, Joanne, what about you? What do you think? Like, what would you do other than just like looking to selling the car or like selling the property? What else would you consider?
I will actually look at my insurance policy, see if it good. I mean, if
if you see that you cannot afford a monthly installment, you look whether you're insured like for suicide, then you want to jump, huh?
No, like my endowment plan and everything, is it efficient, or is it good for me to liquidate and everything? But of course, this is only applicable for people that really overstretch themselves, which I think the percentage is quite low, because like during the COVID period, government has actually ask people to invest properly and just look at your profile and don't overstretch this. So I don't believe this will cause a huge impact on this, just that people might overreact on or rise in interest rate might not be a good sign and everything. So everything is still cool, and according to the numbers, it's not a huge impact.
Yeah, I think you're absolutely right, which is there's a very interesting point, which is just don't overstretch in the first place. Yeah, yes. So buy with a buffer, with like maybe cash on hand to service the money installment. Just anticipate, right? What if interest rate goes up to 2%? Am I still able to afford to own this home? We always want to have a roof, right? And we want to sleep peacefully at night, and like, yeah.
Yeah, and always remember, this doesn't happen overnight. The rise in interest rate is just gradually, and it doesn't cost you a lot in just next day or next month. So everything is still coming slowly and calm. Everything is still good.
Yeah. So once again, I hope you guys are learning something from today's share session so far. So once again, I'm Ivan.
I'm Joanne.
And make sure you give us a thumbs up and subscribe to our channel. See you guys.
Bye.